Good evening, folks, and welcome to the Cloud Chartist weekly Ichimoku wrap for the week ending June 12th. My neighbors are cranking some bad 80s radio, so I hope you can't hear it in the background. I'm using a mic, so hopefully they're playing the heart of rock and roll right now. Hopefully that's not interfering with your ability to hear me. If you haven't joined me before, I will just point out that there is a bug with the broadcasting software that doesn't allow me to have a cursor, but hopefully you can see my crosshairs moving around here, and I will use those instead to show you a certain area of the chart. I might as well just go over briefly the elements of Ichimoku for those of you who are new to Ichimoku charts. Why not? There's not too many, a lot of people are turned off by Ichimoku because they feel like it's in a different language and it's too difficult to learn Japanese, but really there are only a few different names of these elements that you really need to learn. In fact, there are only really 4. There are the cloud. There are a couple of different terms that make up the cloud, but I'm just going to call it the cloud from now. The Ichimoku cloud, you see that comes in maroon or sort of a mustardy color here. We're going to ignore the fact that they're different colors from now, simplify things, just call it the cloud. We have this blue line here. This blue line is called the Tenkan-sen. We have this pink line here, which is called the Kijin-sen. And we have this red line here, which is called the Chikao, or the Chikao span. That is it. That's all you need to know. So you can make 4 flashcards for yourself, and you can go through those 4 flashcards over and over again until you learn those terms. If you look on YouTube, if you want to check out my Cloud Chartist YouTube channel, you can find that I've posted a video talking about the terms of Ichimoku. I call it the elements of Ichimoku. You can just Google elements of Ichimoku Cloud Chartist and find it that way. Going over what the lines actually mean, what they're made up from, and the names of them, and go from there. So let's get going. We're starting off here with crude CL on the weekly time frame. This is the continuous contract. I use the continuous contract for all of my weekly charts because it gives me the most data. Sometimes using the specific contract that's trading right at the moment doesn't necessarily give me enough chart data to use for the weekly analysis. So we see that last week we put in a spinning top type candle. Candlestick analysis is a very important element of Ichimoku charting, so you really need to learn that. There's many free ways on the internet to learn about candlestick charting, and some great books. Steve Neeson's, or Nyson, I don't know how to pronounce it. His book is really great on candlestick charting. Anyway, this is a spinning top type candle. The top tail is a little bit longer than the bottom tail, but overall it's just a spinning top type candle with a narrow body. It did put in a higher high and a higher low than the previous candle. So technically we have an uptrend here, although the body of the candle closed at a lower level than the top of the prior candle, which is worth noting, but of unknown significance at the moment here. Overall, this chart is bearish. Anytime you see an Ichimoku chart where price is under the cloud, you can call it bearish overall, period. It may be in an uptrend, and there are different degrees of bearishness depending on how it's interacting with the other elements of Ichimoku, but overall this chart is bearish, which is one of the best features about Ichimoku charts is you can look at it in 1 second and know whether this chart is bearish or bullish by whether or not it's over or under the cloud. So you could look at many different monitors with many different charts and quickly go through whether or not they're bearish or bullish on whatever time frames you're looking at. So we see that despite being bearish overall, crude has been making some progress from off the lows down here at 42.41, and it has been above the Tenkan-sen ever since it broke over the Tenkan-sen back here in March. It's been climbing up over the Tenkan-sen, and it's also over the Kijun-sen. And we have the Tenkan-sen, this blue line, is crossed over the Kijun-sen, which is called a bull cross in Ichimoku. So those are some bullish signs as far as crude right now, but it's still bearish as it's still under the cloud. So, I mean, basically we're just going sideways right here for the moment. We have support down at the Tenkan-sen below, which is at 57.03. So if we do get selling, we should find support down at 57.03. One other thing to note about this chart, we also have a lot of topping tails. You'll see above 50, 60, 60 or so, there's been sellers coming in. So we've been unable to close a candle above, say, 63, 62 thus far in this sort of up to sideways move that's been going on. Another thing that's worth pointing out is the Chikou span, this red line here. Chikou represents current price, so it's doing exactly what current price is doing, but it's time shifted 26 periods into the past. So in this case, 26 weeks. So it's banging into this big bearish candle that happened 26 weeks ago. When the Chikou bangs into a big candle and can't get over it, it tends to great tune. Pardon me, I'm commenting on a tweet that just came by. I don't know about that, Derek. Anyway, it's better than share, let's put it that way, which was playing prior to me starting the video. The Chikou span could get rejected by this big bearish candle. It's pretty hard for a Chikou span to get through a big bearish candle like this. So if it does resolve to the downside, then price is going to come down back towards the Tenkan-sen here. But it could also break through and go up. If we wanted to really get ahead of ourselves and imagine that the Chikou is past this big bearish red candle, and in this area, and let's say it goes right through and it stays above, then it's going to have support at the tops of these two candles, but it's going to have resistance at this Tenkan-sen, the blue line coming down here. So it's going to have to deal with that at some point. And the resistance will be in different areas for different weeks. Like this week, if the Tenkan-sen breaks through this cloud, resistance is going to be up here at 68.47. So if you're following me, which I hope you are, you'll see that there's nothing over here to tell you that there's resistance. Like there's no moving averages or other stuff besides a cloud. I mean, obviously, so the next candle is going to open up here. The resistance on the cloud is way up here at 74.45, thereabouts. But so you wouldn't know that we were going to have resistance at this level, 68.14 area, if you didn't have the Chikou span, the very handy, wonderful Chikou span. All right, let's move on. Let's look at the ES. Oh boy, pardon my drawings. Let me remove those. So the ES, and I'm going to zoom in a little bit. You can see that beautiful uptrend before I zoom. The ES finished under the Tenkan-sen, so that's a bit of a bearish move for the ES. It's a long-legged doji, maybe even a long-legged spinning top doji, but the candle was unable to close above the Tenkan-sen, which is significant. Still, overall, the chart is bullish. We're above the cloud, but it would have been a lot more bullish if we closed above the Tenkan-sen. So bulls really need to see price get back over 2095.50. Until it does that, there's a risk that we go all the way down to 2047.75. If we go down and test 2047.75, people are going to start freaking out and saying this is it, this is the big one, the crash, etc. But really, the chart is still totally bullish, even if we go down there. And in fact, it's even totally bullish still if we go all the way down to 1955.55, because we're still above the cloud, and the cloud's rising. So as long as we maintain cloud support and stay above the cloud, there's nothing to be freaking out about the crash. You know, if we sell down next week, if we close the week under 1904, then I will you know, get on board with the oh my God, this is really bearish camp. That would be pretty impressive move. We see also that the Chicago span over here, this red line, representing price time shifted 26 periods in the past, and I hope that you realize that the more I repeat myself, the more you might remember what I'm saying. So the Chicago span is coming into the top of the candles here, so finding support. So we have some decent support, like coming up at 2064.94 is where the Chicago will come into. That's if it goes down all the way down to the top of the candle. If it goes just to the wick of the candle, we have 2075 area, and that's where it found support on this candle too. Interesting to point out, right? Because this candle is the candle that was providing that support. So this red line actually came down and tested all the way down to the low of this candle, of last week's candle, which is 2068.75. So that's you know, inside this big red candle, and then it popped it back out because it supported it. Little nuance to remember there about the wonderful Chicago span. All right, let's move on to the Russell. Russell's actually looking more bullish than the ES at this point, outperforming the ES on the weekly time frame. And I've been noting that last couple of weeks. We do have some differences to point out between the Russell and the ES chart. We're kind of extended above the cloud here. We're actually doing really well, staying so high above the cloud because we did have this danger zone down here, this very thin red cloud with a flat top. That is a sort of like, maybe you could think of that as quicksand. If we had broken below 1202.70, the flat Cajun sand here, we could have been highly attracted towards this flat, thin cloud, and that could have been really bad, or really bearish. Maybe not bad if you are a bear, maybe very exciting and delicious. But so anyway, let's get back to this current last week's candle. We see a very long leg doji with a higher high and a higher low. So still continuing the uptrend here for the Russell. And we even put a body close in higher than last week's body close. So this looks very bullish, except for we have Tenkan-sen and Kijun-sen both moving sideways underneath. So almost more of a sideways pattern, but overall bullish for the Russell. Let's look at the NASDAQ. And if you happen to be watching me, if you're one of the 7 wonderful, lucky people that happens to be watching me, and I think 3 are bots, so if you're one of the 4 actual live people that are watching me and you want to make any requests, feel free to put that in the chat window and hit me up. So anyway, this is the wonderfully bullish NASDAQ. I'm going to zoom in and make it a little bit easier to see. We see that, wow, this is a really nice pattern. I hadn't looked at this before. We see that price came down and sold off below the Tenkan-sen, but then bounced up and closed above the Tenkan-sen. This is a very nice pullback to breakout pattern. And if you're curious what I'm talking about, pullback to breakout pattern, I believe that I have at least one video on YouTube and at least one video on right here on Ticker TV that you can look at about pullback to breakout patterns. It's one of my favorite buy setups. It's when price comes down and tests Tenkan-sen support, and then the Tenkan-sen points upward. It's a really nice pattern to buy, and your risk is really defined because basically you want price to stay above the Tenkan-sen if you buy it. Otherwise, if it goes too far below the Tenkan-sen, it's pretty much a fail. If it does go significantly below the Tenkan-sen, so say we bought the NASDAQ here on open, if it opened right here, and it failed. It went below the Tenkan-sen, which is at 44.39, and it went even lower, like perhaps below the wick of the current candle, chances are very high that it would come down and test the Kijun-sen below, the flat Kijun-sen below at 42.9850. So I'm going to say that if price does indeed lose the low of this current last week's candle, 43.9025, you can look for 42.9850 on the NASDAQ. But overall, you know, totally bullish still. Let's look at the Dow. The Dow is a little bit less bullish than the NASDAQ, as the last two candles have closed below the Tenkan-sen. So this was not, this is a good example of how this was a failed hold back to breakout pattern, because price came in, put in a high, came down, tested the Tenkan-sen, and did not bounce. Even though the Tenkan-sen is tipping up, it didn't bounce and closed the candle near the lows under the Tenkan-sen. So you would not want to stay long for this trade. And indeed, last week's candle was not a good long for the Dow. At least on the weekly time frame, might have been at some point in certain points during the week. Very thin body on last week's candle, and in fact, it could be a morning star type candle or a potential trend change candle, because of the the shorter tail on the bottom, and it's like the opposite of what happened up here. It's possible that it could signal a reverse, but we'll have to wait for confirmation on that. Until then, we can look for support. If we do see price goes lower, we can look for support down at the Kijun-sen at 17,648. If we lose 17,648, then we don't have a lot of support until we get to the cloud, which is significantly below. All right, let's look at bonds. Since everybody's been talking about bonds, let's look at the 10-year first. Wow, I have a lot of lines on there. Pardon me. So ZN is the 10-year Treasury note futures contract. We see that after putting in a very bearish candle the week before, last week we put in a spinning top candle and potential trend change to the upside. That, of course, needs confirmation. It shows that we have pretty decent support around 125 for the 10-year so far. There's no guarantee that it's going to go higher, but it's possible that it might. So we'll be looking at the 125 level, because it closed, at 125.70, so higher than that. So if we come back down and start messing around below the 125 level, then it might be good to be cautious about getting long and just assuming things are going to be all up from here. We see that the Chikou span, the red line representing price time shifted 26 periods into the past, is inside the cloud. Anywhere inside the cloud is offering cloud support. So it could come up and test the top of the cloud, which would be resistance, or it could come down and test the bottom of the cloud, which would be support. And that's actually where this candle, the second to last week, 2 weeks ago candle, found support. Down the low was at 124.22, and coincidentally the bottom of the cloud is 124.22, because that's where the Chikou came down and found support. See how handy the Ichimoku charts can be? Let's look at the 30-year. Pardon me, taking a little drink. This is a non-contract change adjusted chart. I like this one. I'm going to keep going with it. Again, we put in a long-legged doji potential reversal type candle here also on the 30-year. The 30-year has been very crazy and difficult the last week. We got a really significant bounce late in the week last week, and then the bounce was sort of denied. Thus the topping tail. So overall, the chart is bullish until we come down, get down below the cloud. Overall, bonds are still bullish. So everyone talking about you know, the death of the treasuries and, you know, new bear market for treasuries, etc., etc. They're kind of jumping the gun. They can start talking about that when we get below 137. We're still at 150. Still a beautiful uptrend. I mean, if I zoom out, you can see what I'm talking about. I mean, this chart, partly because of this weird contract gap, makes it look, you know, like, oh my god, but it's still above the cloud. It's just a correction so far. In fact, you could probably draw a trend line from here, and let's try that. I'm wasting your time a bit, and maybe you're running out of patience for my video. I know most people have very short attention span, but perhaps some of you who actually want to learn Ichimoku might find this useful. So, if I was to draw a trend line using, I kind of like to use bodies rather than points, but you get my picture. I know I don't have a lot of reference points for this trend line, but we could come down a lot further and still be bullish. In fact, we see this very sharp cloud moving up still. So we could sell off significantly. We could come all the way down to 144.20s and then, you know, continue moving along to the upside. Just seems dramatic at the moment, but on the longer time frame, not so much. All right, what next? Let's look at the Nikkei. Nikkei still fully bullish, although the Tenkan-sen, the blue line up here, and the Kijun-sen, pink line, have both gone flat. So that is signifying it's time to do a little bit of sideways flagging. This is another time when they both went flat here, and we did some sideways flagging after this strong up move, and then we proceeded to do another big up move. Then they went flat here, and we did some sideways flagging. As soon as the Tenkan-sen tipped up here, and this nice pullback to breakout setup that I did mention when it happened a few weeks ago, boom, much higher, new highs. This candle is a hammer candle, and it did put in a higher high, but it did put in a lower low also, so it's an outside candle, so we can't really count the trend as being changed at the moment. So technically we are still in an uptrend, despite the red candle. I expect sideways chop with support at 198.70 on the Nikkei. We are a bit extended. You see the RSI I have hiding down here is a bit, was a bit overbought, but then after that candle last week put in a little bit of a correction back down to not overbought anymore. Pardon my layman's terms. I wouldn't say that I really trade off RSI, but it's handy to have occasionally. I don't really use any other indicators besides Ichimoku myself. I like to keep it simple. Let's look at the yen. The yen normally trades opposite of the Nikkei, but after Kuroda apparently made some comments last week, something like the yen can't go any lower. I don't really know exactly what he said. I went in one ear and out the other. We got a really strong yen move to the upside, but we were unable to get above the Tenkan-sen here. So far it's what I would like to call a Tenkan smackdown. It's not a perfect Tenkan smackdown setup. A perfect Tenkan smackdown setup usually involves the Tenkan-sen pointing down. And that might actually happen because when the new candle opens up, I'll be looking for that as potential to reshort the yen. If you happen to be still short the yen from this bearish move down or from way up here, there's no reason to get out of your short because we have not violated the Tenkan-sen yet. In fact, that's a really wonderful use of the Tenkan-sen if you're in a short trade, and like you can notice if, say, we were up here when we back in July of 2014, Yen was moving along sideways and then got rejected from the Tenkan Sen here. It came down and sold and sold and sold and sold, and then got this bounce here in October, came up and bounced over the Tenkan Sen, but put in a close under the Tenkan Sen. So if you're trading on the weekly time frame, there was no reason to get out of your short trade. And if you didn't get out of your short trade, you were indeed rewarded because it sold off a lot, much more. Came down, came up, was unable to get above the Tenkan Sen here, came down, and then finally got a close over the Tenkan Sen. So that would have been a good time to not stay short and maybe use your capital for something else while we continued along sideways. Then we lost the Tenkan Sen again here, and then sold some more. Then we bounced back over the Tenkan Sen, chopped along sideways, and then lost the Tenkan Sen again and sold off. So we'll see what happens here. If we can get back above the Tenkan Sen on a closing basis, then it might not be such a good idea to be short the yen. Let's look at the dollar. I'll use the wonderful DX that everyone loves to hate. Jeez, I used to trade DX all the time. In fact, just for fun, since I'm being wordy and long-winded and whatever, I usually try to be real concise in these videos, but I'm trying to provide a little bit more information for people that actually want to learn this. Just in case, I used to trade DX all the time, and so these are a lot of crazy drawings that I had. I just thought I would show you that for fun. I'm gonna hide all my drawings, and this is the monthly, by the way. So you can see what the dollar's been doing. You know, the dollar had a really brutal sell-off from its highs in like what, 2001. Brutal. Came down, you know, with a low of 71 in 2008. That was, you know, impressive. But lately, look at this up move. It's just incredible on the monthly time frame. So on the monthly time frame, the dollar is just bull flagging right now, and it could be a pull back to breakout scenario. If we come down and hit 92.65 on the monthly time frame, that could be a great buy point. Let's go back to the weekly, since this is the weekly Ichimoku wrap after all. Wow, I see I'm 27 minutes into the video. That is, well, you know, in school they say like people have an attention span of about 44 minutes, so I can go on a little bit longer. You are probably all over the age of 12. Maybe not. Anyway, so last week's candle was contained sideways in a sideways range between the Tenkan Sen and the Kijun Sen. So until we break above the Kijun Sen, the Tenkan Sen, the blue line, or below the Kijun Sen, it's just sideways for the dollar for now. That's a pretty wide range though, 94.30 to 96.71. So we really have to, let's look at the daily just for a little bit. More information than the weekly can provide. See that on the daily chart, price is actually bearish under the cloud and has been unable to get back above the Kijun Sen here, and certainly not above the Tenkan Sen. So it's best to have a slightly bearish bias on the daily time frame for the dollar right now. Let's look at the euro. It seems like the euro has been pretty crazy trade lately, and I'm going to go back to the weekly because it moves on every single little Greek headline, and half of which are complete BS. That's why you gotta love the internet so much, because anyone can say anything and move markets these days with Twitter. So ignore my drawings on the euro for the moment. 6E. We see that we also have a range for 6E between 110 and 115.26. Until we break out of the range, it's just going to be more sideways action for now. Let's look at some grains. Let's look at corn. I'll try to speed things up now that you guys have had lots of Ichimoku education. By the way, if you are if you feel like you're actually learning something about Ichimoku and you want to be a little bit more intense, you may or may not know that I do have a chat room where I teach live every day, 8 to 5 or thereabouts, and live trade with a bunch of other really very good traders. We trade CL, ZB, ZN, ES, TF, some currencies, and we also talk about various different methodologies and how Ichimoku can give you a little extra edge to whatever methodology you're already using. Like, for instance, several people in the room use market profile, and find that Ichimoku really helps them with their entries and exits. They might have an idea where in the profile price might want to go, but they might want to get a little bit more specific with their entries and exits, and Ichimoku can really help with that if you use market profile. So this is corn on the weekly and bearish, getting the Tenkan smackdown I referred to earlier. Price came up and tested the Tenkan-sen, was unable to get above it and failed. So still bearish for corn, although we haven't been able to get too far below 349. We'll see what happens next week and see if we break these 350 level, go lower. There's no reason to think that we won't, looking at this chart specifically. Let's look at coffee. Coffee has been working very nicely with the Ichimoku elements. As we came down 3 weeks ago, we had this very bearish candle, and then we got a nice looking potential reversal candle, which was indeed confirmed with this lovely reversal, which was rejected by the Tenkan-sen in perfect Ichimoku style. And then last week's candle indeed stayed under the Tenkan-sen once again after testing above it and closed below the Tenkan-sen. So coffee is still fully bearish, but in Ichimoku, price can be attracted to flat areas, and the Tenkan-sen is indeed flat. So price might get attracted back towards the Tenkan-sen and test it again. If we do get over the Tenkan-sen, especially on a closing basis, we can look for a test of 154.23, but let's not cross that bridge till we come to it, because overall coffee is still bearish and just looks like a big bear flag at the moment, unless we see a significant move like over, say, 144. Even I really like to see us get like over 148 to really suggest that we might test the Kijun-sen above. One bullish thing about this chart to keep in mind is we have the shape of the cloud making a peak here. So when we get over to like late August or beginning of August, if we do get back over 154.23, we could be attracted to fill in the shape of this cloud up here. So we could get a strong up move towards the twist in the cloud here. And if we do test the twist in the cloud, cloud twists are a very good area for price to be able to break through. So we could actually potentially even break higher above the cloud here. So if we're going to do it, this would be the place to do it. So that's like this first week in August. So keep that in mind if you're trading coffee on long term. But we really need to get above 155, 160 for that to even potentially be in play. All right. Pardon me. Wow, it's 6. I see some comments in my chat room. I gotta get moving because actually all my weekly charts are going to be the new candle, so it won't even be useful to look at the weekly charts anymore. Thank you for bearing with me and listening to me. If you want more Cloud Chartists, you can check out my website at cloudchartist.com. Follow me on Twitter at cloudchartist. I'm private, so you have to make a request. And that's about it. Good luck trading this week. And and by the way, you can follow me here at Ticker TV. I do daily crude analysis on shorter time frames almost every day. So if you want to be notified when I'm going live to do that, just follow me here, and Ticker TV will let you know when that's going to happen. All right, thanks. Good luck this week.